fellow traders, Jeff with OptionBoxer.com, back with a little bit of a different video today. Before we get into it, please know that I'm not a registered financial advisor, and this video is not a recommendation for you to buy or sell any security or make any investment. Please make sure you're conducting your own research, your own due diligence, and consulting with a registered financial advisor prior to placing any trades or making any investments. Okay, so what I've got here is a value averaging tool on my screen, and the reason I say it's a little different video is typically I discuss strategies or market analysis and things of that nature. Today we're going to look at this particular tool, and the reason I found it useful or valuable is because I had a difficult time with my investments, kind of staying the course long term, and so this little value averaging tool that I've got here is going to help you stay the course over the course of several years, and that way you don't find yourself in a situation where today you feel one way, and then 6 months from now you're thinking, okay, well, I've got to start over, I've got to trade this way, and so forth. It gives you a starting point, and it shows you what to do for the next however many years you want to invest. So let's just start with a price of, let's say, $40. So that's just a hypothetical made up price. Let's go ahead and just bump it up to 50. So that way the total number here equals it. In fact, let's go ahead and make this a little simpler. Let's delete some of this. That way we've got a more manageable amount of columns here that we have to fill up with data. So let's start with 100 now. Basically, I want to turn this into 10,000 if I can. Oh, sorry, I typed in 10. Okay, so that's 15,000. Let's go to 75. And that's close enough, so we could probably go to 72, I guess. Nope, 70 maybe. Okay, perfect. Now I keep saying that, but it'll drive me crazy if it's not just right. Go down to 61 maybe. No, need to go to 64. I want this number right here to be 10,000, and I know it's just OCD of me to get it right to it, but that's what I want. Okay, so starting with a price of $65, let's just look very quickly here at how to set this up. So if you decide you want to build one yourself, you can build this little tool for yourself. The first spot here will be blank. I just put a little dash there because we don't actually hold any shares at the moment. This is just day number 1 of our investment. So we don't have any shares, therefore we don't have a current value of those shares. You can see the background here is white for shares and action, and that's because, and so is the background for price. That's because we have to manually enter that data. Okay, so let's say we had whatever 65 times 5 is. It's actually 325. There it is. We had $350, and we wanted to put it to work for us. We would be able to buy 5 shares day number 1. So you just enter that data there. Action, you enter the same number that you enter for shares. Cash flow is going to be minus F6 times B6. So you can kind of just look at that if you want to set that up to give you your cash flow amount. New value is going to be the new value of the portfolio after you factor in for what you'll see coming up next when this action tells you to buy or sell a security. It's going to give you the new value of your portfolio or that position within your portfolio. And so it's going to take that number, and you can see it's E6 times B6. And then right here we've got a 10% growth projection, which is fairly aggressive. Over the life of a trading strategy, 3 to 4% would probably be a more reasonable number. And then of course, if you annualize that, it's a pretty good return on the life of your portfolio. But in this case, we're just getting aggressive because we only got 3 years to trade with, and we're trying to turn a small amount of money into a large amount. And so I went with a little bit more aggressive approach. And in order to do that, you can see I've got H6, which is the new value times 1.1 or 10%. And then the only other thing you need to see is once you get this number calculated, you want to come down 1 cell and you want to do I6, which is now using this 10% growth projection, so that you can calculate, so you can extrapolate out by clicking this little blue dot and dragging it all the way down to the end. That way you can extrapolate out your projection. Now this column won't ever change once you drag it down. That's just kind of so you can see where you're starting and where you want to finish up. And then so keep moving along here. Now we've got a shares held, and that's just I use the round function. So if there was ever a decimal that popped in there, it would just round it to 0 decimal places and give us the whole number. So I've got E6, and then of course 0 decimals. Right here I've got the current value, which is C7 times B7, and then under shares here I've got the round function again, I7 divided by B7, and then round that to 0 decimal places. And then right here in the action column I've got again the round function, E7 minus E6 with 0 decimals. Alright, and then so you should have everything entered that you need to. You're going to simply highlight these 4 rows right here, drag those all the way down to the end, and that'll put the formulas all the way down. You can see there's error messages here, it's because we don't have the price entered. And then of course these 2 columns, and then again click the blue button, drag that all the way down, and you should have already drug down the 10% growth projections. So once you have that set up, your page should look similar to what I have here. And then I didn't discuss this. This right here is just the investment period. So for me, I invest monthly. I put money into my investment account on a monthly basis. So every month I log in, and I'm just going to simply use the price at whatever day or time I log in. So if I logged in right now, I know the market is closed because it's early in the morning hours here. I know the market is closed, but if it wasn't, and I logged in and the price was $65, then I would use, then that would be the price that I enter here. And it's going to fluctuate around. So, let's say you log in right now and it's bouncing from 65 to 65.50 to 65.42. Just pick whatever price you see on the screen. It's not 100%, it doesn't need to be 100% accurate up to the minute. If it did need to be, you could equal Google Finance, and then you could get the, I think, price. Let's see if that pulls it in. Oh, no, you would need to enter the ticker symbol. So that is the formula, but you need to have something to draw the data from. So if EEM, so equals Google Finance. So we need EEM as the ticker symbol, and then price is what we want. Maybe I entered something wrong. Let's see. Well, in any case, not that worried about it. We're just going to leave 65 there. You can look on Google to figure out the Google Finance information. Well, in fact, I have it here. You can just see. So for the price, it's Google Finance A6. So I guess I did enter it right, but maybe because I had the I'm not sure why it didn't populate in there. Equals Google Finance EEM. And then we want the price. Okay, there we go. So I must have entered something else. So the current price of EEM, and let's go ahead and just move this formula higher. Oh man, I messed up my, there we go. So we need to back up. Now I need to do equals Google Finance EEM price, close parentheses. There we go. Now we've got it set up with the current price. So anytime you log in, you can just simply drag that formula down, and it's returning an NA, so it's going to affect you over here as well. But if this were another day, you could just drag the price down, and then you don't even have to enter any data. That's actually better. But for the sake of this video, we are going to enter some data. But now we've got the Google Finance price, and then let's say 6 months from now, it was the next time you logged in, you could just simply click the blue button, drag it down, and now you're going to have, it's going to populate. It's got the same Oh, I see the problem. It's because I've got two cells here. Okay, so in reality, I should probably unmerge those, but you can do that if you choose to. We're going to just enter some hypothetical information here. So let's say we're going to invest month to month, and again, we're trying to take our investment here from we're starting with 5 shares. We can change that now since that is the actual today's price of EEM. It's at 31, so we probably need to change that to 10. Because again, I want to try to make this to 10,000. So that's pretty close. We can maybe bump it to 11. That kind of seems silly that I was messing with it so much at the beginning now that I changed the price here. But regardless, we've got 11 shares at 31.66. So our total cash flow or our cash outlay is going to be $344. And then our growth projection on that money is going to be $379. And of course, that is a 10% growth. So let's come back, next month. Let's say it went down to 30.25. Now it's telling us we need to buy 3 more shares so that we can stay the course. So we're going to spend another $90 in a month. And that way our growth projections all pan out. Now let's say we go another month. It goes down again to 29.85. Telling us we need to buy 1 more share. Then it goes down to 25.36. We hit a bit of a skid there. We're going to buy 5 more shares. And then now we've reached a point where now it's going to start climbing, 59. I'm just making these prices up as I go. We need to buy 1 more share at that point. Let's say it continued to rise now, and it went up to 28. Now we don't have to buy any shares at this price, and we're still on track to earn 10% return. Let's say it went up to 34.32. It went up big that time. Now we're going to actually get to take some money off the table. And the reason I like this tool is because it doesn't just leave your money in the market at will. If the price rises enough and you can stay the course, it tells you to take money off the table, which is why I like it. Most people have a bit of a problem, I know I do, at knowing when to sell or when to take profits off the table. Well, this makes it easy for you to know that within the scheme of you turning your initial investment or taking whatever amount of money that you're committing to the market and turning it into another amount of money over the course of time. This tells you exactly what you need to do. Well, let's say we weren't done there. Let's say now we go up to 36.25. Again, we're not buying any shares or we're not selling any. Let's say we kept going up. Now we did have to buy 1 more share, so we had to spend another $38. All right, and then price was still working in our favor. Went up again. We buy 1 more share. Price continued to work in our favor. Now it went up by a huge amount over the next month. Now we get to sell 2 shares, take a little bit more money off the table. Price wasn't done yet. It went up to 54.31. We didn't have to buy any more shares. Let's say 1 more month, price went to 58.36 when we logged in. We didn't have to buy any shares, but then now the market's facing some difficulty and price starts to decline. 54.69. We have to buy 4 shares at this price. Price continues to go down. Have to buy 3 more shares. The price hits a big drop and goes down to 41.35. Now we have to buy 11 shares at that price. Then price kind of trades sideways for a little bit. 41. Doesn't really go far, doesn't really do much, but you can see every time it doesn't increase in value, we're going to have to buy some more shares so that we can stay on track to reach our projected goal. And we'll look at this here in just a second. As soon as I get through 36 of these, I know that takes a little bit of time, but as soon as I get through 36 of these hypothetical prices, we will have reached our goal, and then we'll look. You can see I've got a formula here that's going to take, let me just go ahead and do it now. So that way it's populating as we're doing this. It's going to tell us how much money we actually invested total for this particular trade. So it's got these error messages here, and they won't correct themselves until we get all the numbers entered. But once we do, it'll have all this data here, and it'll tell us how much of our own money we ended up having to contribute over the next 3 years to be able to make this a reality. So let's say price continued to trade sideways a little bit. Didn't really go far. 41.58. All right, had to keep buying shares. Price still doesn't go very far. Still kind of just trading in a range for several months there. And then finally we start to break out to the upside. Get to sell a share finally. We continued higher, 47.54, hit a little bit of volatility maybe. Kept going up. Now we had a huge spike this next month. We get to sell some more shares. Price continues to spike higher for another month. Last time it goes to 76.82. We had a huge move. Get to sell a few more shares, but now price begins to slide backwards. So now it goes to 75.24. Then down to 72.39. And then it goes to 71.54. Now it hits the skids and goes to 62.30. Hits it again, goes to 43.24. So you can see we've had to commit a lot of money. But then there's the bottom, 43.20. Again, the next month it doesn't go anywhere. And then in the last month, let's just say that it skyrockets again. 51, and it goes to 68, and it goes to 72, 34, and then it finishes at, let's see, 72.58. Okay, so you can see here over the course of this 3-year period that we've got hypothetically played out here. You can see 1, 2, 3, 4, 5, 6, 7 times it told us to take money out of the position in order to maintain the $10,663 growth projection. So now you can see over the course of 3 years, by this having a negative number in front of it, you can see that we've had to contribute $6,617.47. So if we take that number, let me add a parenthesis here. We take that number and divide it by 36 months. Okay, so it's not going to let me do it all together at once. That's okay. I thought it would. So we've got our sum there. So now we can say equals this divided by 32. So we basically need to invest $206 per month over the course of 3 years, which isn't extreme, but if we were able to invest $206 per month over the course of 3 years, we would be able to take our $6,000 that we started with, $6,617, and turn that into $10,663. So it's just kind of a little bit of a long drawn out process there, but it gives you, in my opinion, it just makes the investment process easier. It doesn't leave you guessing at what to do or how to do it or when to do it or why to do it. It tells you everything based on the current price. So you get the information entered in there the way you want it, and then hopefully price will continue to rise. I know these numbers are hypothetical and they may not be in any way valid to what the market may actually do. EEM may never get up to a price of $75. I don't know. It just may never reach that particular point, but in the off chance it's going to do something, odds are it's going to stay a little more muted than kind of how the width, or the range in values month to month that I've kind of demonstrated here. But regardless, it gives us some numbers to work with. So total over the next 3 years, we have to come up with $6,600, and then if you break that down monthly, that's just $206.80. So about $206 per month, and you can turn $6,600 into $10,663. So pretty good return there, and it gives you an opportunity to start working on compounding your money. You can see here, if you extrapolate that at even just a few more months, you can see that 10,000 grow exponentially. Of course, in order for that to be realistic, EEM here would have to also go higher. Otherwise, you're going to be, using your own money to contribute to this growth. And so the idea is to invest in solid companies, solid stocks that will grow over the long term. And as they do, or you get into a stock at a really good price. If you look at the market right now, The market is tanking based on this coronavirus and stuff. So a lot of things are starting to get more attractive price-wise. And so you get in here on the ground floor and then start value averaging your way up as they climb back up to some of their previous highs. And you can see how you can start with a small amount of money and turn it into a rather large amount of money as things progress. In any case, hopefully the tool is helpful. Hopefully you're able to make one. If you have any questions, feel free to reach me at optionboxer.com. I'm happy to always help and would certainly clarify anything that I may not have done here in this video. Thanks for watching. Bye-bye.